Most traditional banks don't really reward you much for saving your money. In many cases, the annual returns are below 10%, which becomes even less attractive when you factor in inflation. That's why more people are turning to an alternative called p2p lending. If you're new to it, p2p lending platforms are online marketplaces that connect borrowers, who can be either individuals or businesses, directly with investors and remove the traditional bank as the middleman. By removing the traditional bank as the middleman, these platforms often reduce costs, improve efficiency, and create a win-win situation where borrowers gain access to funding while investors can earn potentially higher returns. In this video, I'll break down 5 of the most interesting P2P lending platforms in 2026 you should know about. First up is Maclear. Maclear is a relatively new Swiss-based investment platform launched in 2022. It focuses on financing small and medium-sized businesses across Europe, offering investors returns of up to around 16%. At the time of recording, you can see different investment opportunities listed on the platform, each showing details like expected yield, funding progress, and loan duration. Maclear typically offers returns in the range of 13% to 16%, with interest paid monthly. The minimum investment starts at just €50, making it accessible even for beginners. Compared to traditional savings accounts or bank deposits, this is a much higher potential return, which is why many investors are drawn to it for passive income. On top of the standard returns, Maclear also runs several bonus programs that can boost overall earnings. For new users, there are referral rewards that can go up to around 3% cashback during the first 90 days when signing up through an invite link. There are also loyalty rewards, which can add roughly 1.5 to 3% extra annual return depending on how much you invest. Occasionally, they also offer fixed bonuses when you reach certain investment thresholds. Now, one of the most important questions: what happens if a borrower doesn't pay on time? On Maclear, a delay doesn't automatically mean investors lose their money. In some cases, the platform may step in using a provision fund to cover missed payments, so investors can still receive their expected interest temporarily. At the same time, Maclear actively pursues repayment from the borrower through restructuring, repayment plans, or any collateral tied to the loan. However, it's important to understand that this isn't a full guarantee. If multiple loans default or recovery efforts fail, there is still some level of risk involved. Now, Maclear is interesting because it shows how traditional business lending can generate double-digit returns through structured loans. But this idea of earning yield isn't limited to traditional finance anymore. In crypto, we see a similar concept called DeFi lending, where instead of banks or centralized platforms, smart contracts and blockchain protocols handle lending and borrowing directly. And that brings us to the next platform, 8lens. 8lens is a crypto crowd lending platform that allows people to invest in real businesses worldwide with clear terms, backed by real collateral and paid monthly interest payments. They offer up to 25% APR, which is one of the highest in this industry. Just like Maclear, they also have a project section. You can see each project's expected yield, loan durations, and funding progress. One of the biggest advantages of 8lens is its real-world asset-backed lending structure. Here, loans are issued to actual businesses, and in many cases, they're backed by tangible assets like equipment, inventory, or property used as collateral. So instead of lending based on trust or speculation alone, investors are effectively funding businesses with real backing behind the loan. And in the event of a default, those underlying assets can be recovered or liquidated to help protect investor capital. Another feature of 8lens is its built-in bonus system, which is designed to reward new users and encourage early participation on the platform. To start with, new users can receive a 30 USDC welcome bonus after completing registration and making their first investment. 8lens also has a referral program where users can earn rewards by bringing in new investors. When someone signs up through your referral link and invests, both users can receive additional bonus rewards based on platform-defined conditions. 8lens offers a more structured crypto lending model, where investors are still exposed to individual lending opportunities and asset-backed deals. But the reality is, not everyone wants that level of structure or involvement. If 8lens feels a bit too detailed, or you simply don't want to think about managing loans, selecting opportunities, or understanding the lending side too deeply, then Lendamax will likely be more interesting to you. Lendamax is a new crypto yield platform that launched less than a month ago. It offers up to around 25% APY through daily interest earnings, while keeping your funds flexible with no lockup periods. However, it's important to understand that it is not traditional P2P lending. You're not directly funding individual borrowers or choosing specific loans like you would on platforms like Maclear and 8lens. Instead, Lendamax works by pooling investor funds and allocating them across internal yield-generating strategies. These include liquidity provision, short-duration trading activities, and collateralized lending, all managed by the platform itself rather than the user. One key feature that stands out is that there are no lockup periods. Investors are not required to freeze their funds for a fixed duration, which adds flexibility and allows capital to remain accessible while still earning daily returns. When compared to platforms like Maclear and 8lens, the difference comes down to structure and control. Maclear and 8lens are more focused on direct lending opportunities and individual deal selection, where investors evaluate specific loans before committing capital. Lendamax removes that entire process and replaces it with a fully automated system that handles allocation in the background. Now, Lendamax is all about keeping things simple and automated on the crypto side of yield generation. But if you're looking for something just as simple, yet built around real-world business lending in a more structured environment, there's another platform worth looking at, and that brings us to Debitum Investments. Debitum is a regulated European lending marketplace that gives investors access to real-world business loans, mainly from small and medium-sized companies that need financing for operations or expansion. Investors are directly funding real companies across sectors like logistics, agriculture, manufacturing, and trade. Each loan listing includes clear details such as the borrower profile, loan purpose, repayment term, and expected yield, allowing investors to make informed decisions before allocating capital. Returns on Debitum are not fixed across the platform, but generally fall within a 10–15% APY range depending on the risk profile of the loan. One of their strongest points is their regulated European framework, which adds oversight and standardized reporting. Investors also get access to detailed loan documentation and risk classifications, which makes the platform transparent. While Debitum focuses heavily on structured business financing, some investors may prefer a platform that feels a bit more flexible and beginner-friendly, without losing the core idea of P2P lending. That's where Lendaball comes in. Lendaball is a relatively new European P2P lending platform that launched last year, allowing investors to earn returns by funding consumer and business loans through partnered loan originators. The platform offers returns of up to around 6% annually, with investments starting from as little as €10. One of the most important things to understand about Lendaball is its connection to Virtula Group, the financial company behind the platform. Virtula has been active in the lending industry since 2012 through businesses operating in Romania and Moldova. In fact, many of the loans listed on Lendaball come from companies within the Virtula ecosystem itself, including lenders supervised by the National Bank of Moldova and the National Bank of Romania. You can get started with as little as €10, which makes it beginner-friendly for people who want to try out P2P lending without putting in a large amount of money. One major feature is the presence of buyback protection on the loans listed on the platform. If a borrower becomes significantly late on repayments, the loan originator is expected to repurchase the loan and return the investor's principal together with accrued interest. And that wraps up my top 5 P2P lending platforms worth checking out right now. Each platform on this list brings something different to the table, from traditional business lending to newer automated yield systems. In the end, the right platform comes down to your goals and what you're looking for as an investor. Thanks for watching, and I'll see you in the next video.